Wall Street is trading under pressure. The US dollar asserts its strength. Yields over 10-year Treasuries stand at the highest point since 2007. The reason is not only geopolitics. Investors are anticipating a speech by Jerome Powell and his colleagues at an event hosted by the Economic Club of New York. He is likely to signal the intention to keep interest rates unchanged. At the policy meeting in 2 weeks, apart from that, investors are trying to figure out the Fed's agenda for further monetary policy. Jerome Powell is expected to soothe investors' nerves, providing the clues to the next policy decision. At the last meeting in mid-September, the Federal Open Market Committee decided to put the funds rate on a hold and to assess how the economy has been developing. Powell will deliver his speech 48 hours before the traditional silence period ahead of the Fed's policy meeting. In this context, the market could give a strong and long-lasting response. Investors are going to digest all recent comments by Fed policymakers. Market sentiment was neutral in the New York pre-market, but it does not matter at all. Recently, the stock market is poised to close North American trade with a sharp fall. Exactly this dynamic was recorded on Tuesday and Wednesday, so analysts raise doubts about rally on Wall Street that will evolve into a bullish trend. Yields of 10-year Treasuries approached to 5%, dampening the appetite for stocks. Traders are monitoring corporate reports and the news on escalating tensions in the Middle East. The fact that yields of the benchmark Treasuries are climbing to 5% is bearish for the stock market. This phenomenon is considered to be a psychological obstacle that could entail economic troubles to satisfy financial needs. Yesterday, the S&P 500 closed 1.3% down at 4,315. In other words, a rally triggered by the data on building permits was retraced by 50%. The S&P 500 found support at 4,310. If the index opens today with a gap downwards, the instrument will run the risk of a decline to 4,200, the lowest levels of early October. Perhaps the decline could be steeper, and the key support is seen at the area between 4,300 and 4,335. Importantly, the S&P 500 is currently trapped between the two key technical levels. Until a breakout happens, the next stage of the bull market is out of the question, and the US dollar index looks a bit shaped because the traders are hesitant about its further trajectory, and the index is trading at uncomfortable levels from where it might begin a slide. Nevertheless, the buyers are trying to safeguard the level of 106. The instrument could bounce higher, though this move isn't in question. Traders should stay alert when the index reaches the key level of 107.19. If it's past, the next upward target could be 109.30. The recent resistance at 105.88 did not turn into reliable support in case of a decline. The level of 105.12 also matters a lot to help the index settle above 105. If this attempt fails, the best option for the US dollar's recovery will be 104.33. That could act as a support. As for the economic calendar, traders currently monitor a weekly update by the US Labor Department. Initial unemployment claims grew to 298,000 last week from 211,000. The forecast was about growth of 212,000. Another report worthy of note was a monthly survey by the Federal Reserve Bank of Philadelphia for October. Manufacturing activity in the region was expected to shrink less than in September. The manufacturing PMI was at -9 points, lower than in the consensus. And later today, a report on home sales for September will be on investors' radars. The USD CAD pair has been rising for a 30th day in a row, and it's on the way to the highest point in 2 weeks. The currency pair traded at 1.3730 in the New York pre-market, having grown by 0.12% today. The instrument finds support from a variety of factors. Weaker than expected inflation data and the sell-offs of crude oil contracts are weighing on the commodity-reliant loonie. The bullish US dollar is pushing the USD CAD pair up for the time being, and the greenback is expected to hold the upper hand of its Canadian rival in the short term. If the instrument closes above 1.3710, it will ensure a more active up move. The upper target is determined at 1.3780. If the US dollar loses ground, the currency pair could get stuck in the range between 1.3650 and 1.3660. And today, Bitcoin is still trading above 28,000 because the supply on the crypto exchanges fell to multi-year lows. Since last Friday, more than 33,550 tokens have been transferred to gold crypto wallets from crypto platforms. At the same time, Bitcoin reserves on exchanges are at historic lows. A considerable outflow of funds reduces liquidity of supply. It means that long-term investors are betting on Bitcoin's growth, and the catalyst for a rally in the crypto market could be the approval of a spot Bitcoin ETF. And this move by the regulator will add almost $1 trillion to the market capitalization of the #1 crypto. Interestingly, if funds managers applying to be included in a Bitcoin ETF were to allocate just 1% of their managed assets to the ETF, in theory, the price of Bitcoin could rise to between $50,000 and $73,000. And we hope that our market review helps you make well-rounded trading decisions. Good luck in your trading, and see you online tomorrow!